What's going on, guys? Today I'm going to be talking about just a quick daily recap of the day, as well as how to identify A plus setups using our 50% Fibonacci strategy. There's two things that you need for it to be an A plus setup. One, the higher time frame target and higher time frame context. Okay, you want to make sure that you're taking trades that are supported by a higher time frame. This is how you get better reward. Okay, because oftentimes if you're on a 2K tick chart and it disagrees with the 5-minute or 10K tick chart and disagrees with the daily, a lot of times you're taking a trade with risking 1R, but you have limited reward because it's only a matter of time until that smaller time frame corrects to the higher time frame targets. So you do want to make sure that it is aligned with higher time frame context, and you want to make sure that your lower time frame has a trend channel that's in play, right? You want to make sure that your Fibonacci 50% is supported by trend channel theory. Okay, so looking at the daily chart, we obviously have a trend channel working up. We have an overshoot. We have a 50% pullback after that overshoot, and then we have a target up here to the high, right? We had another 50% on the daily here as well. And then again, we're targeting this area. So we're targeting the 60-60s to the 60-80s. That's our higher time frame targets. And we are just simply expecting two legs to a new high. That's the expectation of the daily chart. So now obviously we want to go down to the 5-minute chart, because just because we have that obvious target does not mean that we're going to go up in a straight line. There are going to be correction phases. So you're going to use kind of the 10K tick chart to really filter that. You can see here that we had a 50% pullback on the 10K tick chart, which formed these measure move here, right? Now, obviously yesterday we were in this very, very obvious range. Okay, so this morning, I woke up and looked at the chart at around 9:30, and what I noticed is that we had a break in new extreme. However, we never really pulled back into the 50%, right, of this trend channel. Typically, trend channels are going to pull back after a break to a 50% before making its targeted move. Okay, so what I saw was a trend channel that had a break above these very obvious highs here, which means that this is most likely going to be a liquidity sweep, right? A liquidity sweep is when you have a lot of sellers right here who are shorting the market, and a lot of sellers have their stops up here. And what institutions will do is they'll push it above these very obvious highs, because then all of these sellers have to buy back their shorts. Okay, and when they buy back their shorts, you'll see this temporary spike as we get up above this level, right? This is everybody buying back their shorts. However, this allows institutions to take big short positions. Why? Because think about how many people's stops are above these levels. A lot, right? Thousands, hundreds of thousands of people have their stops above these levels, right? So now if an institution wants to tank the price to the 50%, they now have all of these people, on the bid side of the market looking to buy, that institutions can now sell their positions to, which allows them to get this big rally to the downside. Right? That's how liquidity sweeps work. Institutions, remember, they have a lot of orders, and they aren't able to get in and out of the market like we can. We can get in and out with 1 to 10 ES contracts. These guys might be trading with thousands of ES contracts, right? So they can't just get filled where they want. So they have to create that liquidity and create those buyers to be able to move the market to where they want it to go. Okay, so we had that liquidity sweep into the 50%. Okay, so that was my theory at 9:30, is we have a liquidity sweep. Expectation is that we're going to break down, and I want to see these lows swept here into this 50% area. So that's the higher time frame target and higher time frame context. Now, even if you don't understand liquidity sweeps, you still could have just drew your 50% and saw that we had a 50% down here and this big bearish momentum. And obviously, you still could have, in theory, kind of had the context for this trade, but of course, understanding liquidity sweeps help you a lot, right? So that's step one. We have context to hit this 5-minute or this trend channel target. Okay. So step 2 is to have a lower time frame trend channel in play. Okay. So the trend channel that I saw in the morning was this trend channel here, right? So what I saw is it holding, and then we had an overshoot. Okay. So in this context, I didn't know if we were going to pull back to this 50%, which we kind of do, or to this 50%. You know, sometimes it will be the closer 50%, sometimes not. It looks like we still got in on this 50%. However, I wasn't too certain. So what I did is I just waited for additional confirmation. What does that mean? That means when the market has a trend line break after an overshoot, again, it's just a short break here after this. That's a little hard to see, but again, we had this massive overshoot. So that's why I was expecting this. The market will typically make 2 legs to a new low. So rather than shorting in this area, what I simply did is I waited for a 50% pullback from this first leg, got in here, and then I wrote it down to target, right? And I believe here I got 10 points off this trade. Yep. So I got 10 points off this trade because I took profits at this 50% pullback here, right? So I got in on this micro 50% pullback, but then used the little larger 50% pullback to get out, right? So I had a higher time frame target based off the liquidity sweep and the second 50% pullback of this trend channel, to then take a short down to those levels. And that was how I made 10 points on the market today, right? We had 1, higher time frame context. 2, we had a smaller trend channel in play. Okay. Now, obviously, if you're in the 2K tick chart here, you know, the context is that we're going to break above these highs, right? That's our expectation, is that we're going to break above these highs after slamming into the 50%, right? We want this 50% to hold and slam above. So obviously, you know, if you have no trend channel here, you know, you don't take any positions, and you can see there's no trend channels. If you draw something like this, it doesn't really make a lot of sense. We did have a big overshoot. You know, there's really nothing here. We're kind of flat. So you're kind of just waiting for a break to the upside. And eventually you can see we start to form a trend channel. So higher time frame context is that we're going to go up and sweep these highs and target these daily targets as well as these 5-minute targets. That's the higher time frame context. So now we're just looking for a way to get in. Okay. Now, to improve the win rate of the system, there's 2 things that I've been doing. One is waiting for the signal bar after the 50% pullback. Okay. So for example here, if I was to take this 50%, because my expectations is that we bounce back into this 50% and we held, you know, could I have a limit ordered in on this wick here? Yes. However, to improve win rate, I have been waiting for the signal bar to form, and it has to be a good signal bar, bullish signal bar, and then targeting the negative 26, negative 23.6 extension, and that would have gotten you a 2.5R on that trade. Another thing that I've been doing is, you know, what you guys saw here is, if you have this trend channel in play and you're not sure if the 50% is going to hold, wait to see it hold and then get on the 50% retracement of that original one that you're going to get in for the second leg down. So there's 2 ways that you can add a confirmation to your setups. Okay. And you can see here that was a nice 2.5R trade. Then we go to our next Fibonacci 50% extension, which is here. Now, you know, I didn't take this. Well, 1, because I was done trading for the day, but 2, it looks like we have a trend line break. So I'm not getting into this because I'm expecting this trend line to break because we have an overshoot, right? You want to take good setups. We have a trend line break, or excuse me, trend line overshoot. Don't take trades to trend line because it's most likely going to break. So I waited for this break to the downside here. Now, again, could you limit order in here? Yes, you can. However, the context is bad. Why? Because we have an overshoot. We have the prices come here, and then we have a new high. So in theory, the trend line has already been satisfied, right? So what I do is I wait for that 50%. I still want to see this level hold, because if we're going to go higher, this level here should hold. Right? We're also at the bottom of this trading range. So there's multiple supports in this area. So what are the two rules for if you want to look for additional confirmation? You can get in on the second 50% Fibonacci extension, right? Or you can wait for a good signal bar. So there's no good signal bars here, no good signal bars. So you're going to go, all of a sudden we have a very nice, beautiful bullish signal bar at this 50% area, right? And again, you can see how we're not able to get below this. So this is context that we could potentially get an entry here, right? And one, is it supported through higher time frame context? Yes, because we held at the 50%. So the expectation is that we're going to hit this target. And again, you can see we did coming down and bouncing again, but that sometimes happens. Sometimes it will test the 50% multiple times before hitting target, but you never know. Sometimes it doesn't, it just comes down and then goes right to target. So we have higher time frame context to have a logical conclusion that we're going to go reach our target, as well as we did have a trend line break, and we may get that, two legs up to a new high, as well as if you look at this 50% Fibonacci, we also have a negative 23.6 extension here that was never met. So it's a little sus to me that we did come here to the 50%, simply made a new high, but we never hit the negative 23.6, and then we come back down to the 50% support and the range, and then produce its extremely big bullish candle, right? So you can see here that if you were to get in on this bullish candle here, your negative 23.6% would give you about 2.75 R. If you wanted to be a little bit greedier and go for 3 R, you would have hit that as well. But again, it's supported from the higher time frame context, and the trend channel finally gets the break after the overshoot, and we are going to expect new highs, because yes, we got a new high, but we never got that break. Right? So this adds additional confirmation and context for prices to go higher. Okay, and then finally we do go up, and again you can see that we had just a little micro channel. We had a pullback. Let's see if this hits the 50%. It does hit the 50% right here. So again, you can go short right in here, because again, we do expect the new lows, but this isn't a trade that I would take, just because again, I'm looking for the context. I would need to see prices break lower before I start shorting. Most likely I would take shorts down here, because we did break below the range, which means we might go and retest the 50%. But again, if you took this, it's a little bit sus, but we are under the 21 EMA. We are under the range 21, the range resistance, and we do expect a new low. So again, you could take that. But again, this really is just what I saw today. And then again, we're just getting this big spike up that's rejecting off the 50% of the higher time frame 5-minute chart. Trend channel is 50% before making a new high. So that's how you get context behind, taking these trades, having high probability, and improving your win rate. Something I've been doing to increase my profits is having a higher win rate. I've been averaging around like 25% with 5R, which is, good. But, I don't want to be, 25% win rate. I want to be a 50% win rate kind of guy, 40% win rate kind of guy with that 1 to 3, 1 to 4, 1 to 5. So this is ways that I'm, adding more context, and just trying to really stick to my rules to make sure that I increase my win rate. And that's how you have an A+ setup, right? We have higher time frame context, liquidity, sweep, pullback into the 50%. So you want to go short into the 50%. Then we break above the 50%. Expectation is that we're going to go challenge these highs here, right? And eventually hit our target. So we're looking for longs until we're there. However, you can see that we did get 2 legs up here. And again, we got to break up a channel, new high, and then we pulled back underneath the range resistance, excuse me. And again, you can see this here, somebody might take this 50% right here. But again, this is why the rules are important. You could take this 50%, but is there a trend channel in play? I don't really see one. This looks very wonky, looks very trappy. It doesn't look well. So again, you have no trend channel in play. So that would keep you out of this trade. right? So that would have kept you out of that trade. And again, you also have a short-term downtrend channel as well if you wanted this to get a new low. So that's just kind of how you use your higher time frame context as well as your short-term trend channels to get an A+ setup and to have more reliability in your trading. If you guys have any other questions, feel free to reach me in the Discord.